It is the 1st of February, and that means it is time for a new edition of analyzing these charts on the monthly time frame, because the monthly candle has just closed. It is also the very first day of the Chinese New Year, which is the year of the tiger in 2022. Last year was year of the ox, year of the bull. This year is year of the tiger, which is also supposed to continue to bring good fortune financially. So hopefully that is going to be the case for all of us here today. So if you are new to the channel, hit the subscribe button, click the notification bell, get on my email list. It's the first link in the description down below, so I can send you updates whenever I upload a new video. And of course, feel free to follow me on social media on Instagram and Twitter. The links are in the description down below. Okay, so starting off with the monthly returns for Bitcoin. January closed at a minus 16.68%. Okay, so if we're looking at the historic returns over here, that is actually not too surprising, because you can see since 2013, there was actually more red than green. So basically this matches up with the historic performance of Bitcoin. Last year was plus 14%, this year is minus 16. You can see in the previous years here, minus 14, minus 25, minus 8. So it's pretty much nothing unusual for the month of January. Now, February, however, does have a historic green track record. You can see since 2013, there were only 2 red months. So that does look bullish, of course, historically speaking, but the charts might give a bit of a different picture, and we'll get into that in a second. So as I'm making this video right now, Bitcoin is currently trading at $38,523. You can see the monthly close for January was $38,500 to the exact dot. Now let's go and recap last month's prediction, and then we can go ahead and look at what this potentially tells us for the next month ahead. So this was the video that I recorded on January the 1st. I will link to it up here if you're watching on YouTube. Otherwise, it's in the description down below. And I gave 2 scenarios there because this is a tricky time where we don't really know which way it's going to go. So I wanted to share the bullish scenario and the bearish scenario, meaning it's basically like computer code, if this, then that, right? So if a certain level holds, then this is what we could expect. But if the other scenario plays out, then this is what we could expect. And I know there's a lot of people who always say, well, in TA, there's a lot of people that just say it can go up or down. Basically, no one knows. Yes, of course, technical analysis is looking at the charts and looking at probabilities. It's not a crystal ball. If anything was 100% certain, everyone who knew how to do this would be a multi-billionaire, okay? It just doesn't work that way. But you look at probabilities and then you say, well, if this level holds, then this is a potential scenario. If this level breaks, then this is a potential scenario. And that just allows you to be prepared for whatever happens so that you can act on it and not be caught off guard. So basically the bullish scenario, what I said, what could have happened is if the $40,000 to $44,000 level held last month, we could have bounced and perhaps we could have maybe started a new uptrend. The bearish scenario, on the other hand, was looking at 53,000 as a resistance, and we have a bearish scenario that would go down to a retest or a sweep of the May lows, which was basically under $30,000. Basically be, in my opinion, a retest or a sweep of the May lows over here, like I said earlier, so maybe slightly below $30,000. Okay, so as you know, last month was a bearish month. The low was actually just below $33,000, so we went to 32,937, and now we're back at 38,500. So the bearish scenario has basically played out, which is we broke the $40,000 level, which has now basically become resistance, right? That's how it works. If a support level is broken to the downside, it becomes resistance on any bounces up, and that's what you have to be careful of. So we are now clearly in a bearish downward trend, and my target personally is still, what I'd like to see is a retest or a sweep of these lows of May last year. The reason being that that might then complete the bearish trend and we can start on creating a bottom. I think it would be interesting and unusual if this bearish trend does not end up retesting or sweeping these lows. It would actually be a pretty bullish thing if it does happen. But I think the chances of it actually testing or sweeping these lows is pretty high. Now, what we could see is we could see bounces within this trend, okay? Because it has moved down 50% pretty much from the top of the $69,000 top, we can see bounces of several $1,000s without it actually becoming more bullish. Okay, so let's just change this to, for example, a weekly chart, and you can see in any sort of trends there's always counter trends, there's always bounces. So you can even see it better on a daily chart. So if we go back to, for example, 2018, which was the last bearish trend, the real major one, probably a lot of you are familiar with it if you have been in crypto for the last several years, is you can see on these moves there are counter moves, right? So a bearish trend ends up going a lot lower ultimately, but within those moves you get quite violent counter rallies, right? And they look bullish, but every time they form a lower high and then it drops and then it rallies up quickly. And you can see in percentage terms this is quite a big rally. I mean, this is an 86% rally, and then it continues going lower, right? These rallies can be pretty strong. So that is something that we could expect at this point. I mean, we've already gone up from 33 to now pretty much 39. So is it possible we go to 40 or 44 or 45? Yes, absolutely, that's still a possibility. But looking on the monthly chart, just to keep it simple, and you know I'm already a fan of the moving averages. So the 50-day moving average, the 50-week moving average, those are basically levels that I'm looking for. If we get above those, that's when I'll start considering getting bullish again, because then the trend has flipped most likely to the upside. Until we're below there, you can see like we're still under a sloping trend line over here. We've had 3 red candles. Sure, we could have a nice big green candle here next to it, but unless we get to above this monthly candle open, right, January's monthly candle, so above 46,000, until we get above there, I would say there's still chances of that just being a lower high and then continuing lower until the trend is complete. So usually bottoms of a bearish trend end in either a capitulation with a big violent sell-off that we had, or an extended sideways period. So if you can see over here on the weekly, we can also see that. So this was a capitulation and an extended sideways period before the trend goes back up. It needs time to recover. So far we haven't really had a capitulation. We've had a strong sell-off continuous from November, but we haven't really had a huge monthly candle that completely capitulates the bear market. And we haven't really had an extended sideways period yet. So it's possible that maybe we can get something like this that we saw in May last year, and we continue to go sideways for a couple weeks, maybe a couple months, or it is still possible that we bounce, create a lower high, and then capitulate there. But really for me, until we claim the 50-day moving average and the 50-week moving average, you can see what those levels are. So let's just put the 50-week moving average over here. You can see the 50-week moving average is currently about $47,000. So until we reclaim that with a weekly close above it, I'm not looking to get overly bullish at any point. Now, of course, that is a big rally, right? It can go from 38 to 47 or 48, get rejected here and continue going lower. So that could be a pretty significant bounce. But if that ends up rolling over again and you buy towards the top of the bounce before it drops another 50%, obviously that's not ideal. So that is what I would suggest keeping an eye out for. As long as we're in this bearish trend, until we reclaim the 50-week moving average, that's an easy way to look at it. You can see all this time we're above the 50. So until then, any bounce could simply be a lower high. It could fail and it could roll over again and continue going lower. So we're going to have to see how that plays out. I want to see a test or a sweep of these May 2021 lows. That would be ideal, slightly lower, and maybe create some sort of bullish divergence on lower time frames, and then hopefully continue and start the next leg up. That is what I'd be looking for. But if we continue to bounce here first, and again, that could be into the low 40,000s or the mid 40,000s, look for a failure around this level, maybe 45 to 46,000. If it fails there and it tops out and it reverses back down, well, then we could still be in for a sweep of these lows. So looking at Ethereum on the weekly chart, you can see it's currently at $2,747. I did not make a prediction about that last month because the video was already too long. So this month I will just basically say what I think over here. And it's not a very bullish looking chart at the moment. Okay, so if we change it to the monthly, you can see we just had a big monthly candle there, 2 red monthly candles there in a row. What we have here, you can see there's a negative divergence over here on the Ethereum chart. We have the MACD that's almost about to cross down. So this is basically looking like it does want further downside on the monthly chart. If we are looking for some level to get above, I would say we need to get back above the monthly open of January, which is about 3,700. Until we get above there, any bounce, again, could still just be a relief rally that ends up going lower. If you look in the weekly, we are now below the 50-week moving average. Again, that only happened really in the bear market of 2018. The whole bull market since mid-2020, we stayed above it. Now we're below it. So that's going to be a level to watch. If it just rallies up to there, retests, if it fails at this level, you can see over there the bodies provided support. So there's a support resistance line over here. So approximately $3,000, maybe to the upside. We rally up there, we retest that. If it fails over there and it rolls over to the downside, again, we're probably looking at retesting or going slightly below the May 2021 lows, which is about $1,700. And on the lower side, maybe the previous high here, which could be maybe anywhere between 1,200. So 1,200 and 1,700 would be a potential downside target for the end of this bear trend. And then hopefully that will be an amazing buy opportunity, where after that it starts to reverse and it builds a new trend. And then we start moving towards new all-time highs, potentially maybe even towards the end of this year or early next year. Because again, the bull market cycle was slightly different to the previous time. So that probably means the bear market cycle is different too. And I would not suggest that there is going to be another extended bear market like in 2018. Instead, we're probably going to go lower. That's my opinion right now. We go lower, we get that sell-off, and then we start a quicker recovery that maybe within 6 to 12 months goes back to the all-time high and beyond. So that is what I'm looking for right now. Basically, in summary, is if we do get bounces, be careful of them failing, right? Creating lower highs, then rolling over to create new lows once again. I'm not sure that the bottom is in. Be careful of anyone who's saying the bottom is in until we reclaim some of these more important moving averages, especially the 50-week moving average, both on Ethereum and on Bitcoin. That will be good signals, in my opinion, that the bottom could very well be in and that we're starting a new trend up. Until then, and until we're below there, the bearish trend is still in play and bounces could form lower highs. So let's see how this month goes. I hope you enjoyed this update. If you did, please smash the like button. Helps the video get out to more people. Subscribe to the channel. Get on my email list. First link in the description down below. Follow me on Twitter, on Instagram, social media, and I will see you in the next video.